Okay, so someone asked me um, in the Discord, what do I look for at these key levels that I find in order for me to get trade entries? So um, I'm going to go over Tesla because it's something I trade often. So we had a key level at 271. Um, if we go look, I'm going to start from a weekly time frame and then move back down. This is how I draw my demand zones. So let's look from a weekly time frame. I can see right here we have a basing candle with a large engulfing candle. Um, then we really don't have much structure on the 2 week time period. On a weekly time period. So let's move down to a daily. On a daily, I'm not seeing much structure, but I do see this uh, basing candle right here with a red um, engulfing candle. But the thing I like is that we came back and retested this area and we found buyers. So this would be a key level that I would want to play again if we ever came back to this level where I could play a bounce to the supply zone. Also, I want to look at, let's move down to another time frame to a 4 hour and let's see what's taking place here. So on a 4 hour, I noticed right here that we had a previous supply zone at 270 up to 275, and I see that we have gapped up above this area and that at 283-ish we're starting to have we started to have resistance, and we consolidated for a while here, and I want to see when we finally got above this level what happened. So in this area right here, we finally get above this area. So let's move down to a smaller time frame. We're now on a 2 hour chart. What do we find on the 2 hour? We see where we got above this area, and then right here we ended up gapping up. And buyers or sellers were really agreeing upon price right here. So let's see what happens once we move out of this area. One thing we want to see when we gapped up, the previous resistance level on the gap up normally acts as support. So we drew our support line at the top of this area that was previous resistance. And then we want to move forward to see what else we formed. We have a doji right here that formed and also followed by an engulfing. So we know right here buyers and sellers were agreeing upon price and buyers won. So down here at the base, we should probably have some kind of limit order, some institutional limit order. And it kind of lines up with this area where buyers and sellers were agreeing upon price, and price could move up or down for these 2 hour time frames. But right here we see we have a area at 286 where we have some buyers. So I marked that. It hasn't necessarily been retested on a larger time frame, so I can't say that that's a definite zone I want to play. But it is a zone I want to watch, and if that one doesn't work, I definitely know right here at this 284, 285 area where we gapped up that we probably have support. It has been retested several times, so this is definitely an area that I would want to play if we ever move back into this area. So I would want to play this 286, 285 area up to 290, um, where we have kind of topped out right here. I didn't get to draw it, but this is like our resistance area right here. I'm gonna mark this. Um, and then hopefully a continuation to the high of 292 and maybe a breakout above the high, and then we could target this 297 price area. And I think this was a weekly supply zone that I drew. I just didn't get to mark it. But Let's move forward and let's really see what do I need to see in these areas to take a potential trade off of. So let's move to Monday morning where we really had the price action that moved us, that gapped us up above this previous resistance area, 285. So we gapped up, we opened above it, um, knowing that previous resistance areas tend to turn to support. We could have taken a trade off of this, and this is a 3-minute time frame. Um, Sometimes people trade the 1 minute or 2 minute at the open. Um, I'm not really sure what structure. I like to go off of structure. So if I see like a bullish structure like this, like a basin or a doji followed by an engulfing, I'll normally take a trade off of that. I see a lot of bullish buying volume right here on this 2 minute time frame. I know that the 285 area should be acting as support. I see it line up with the TTM squeeze that we have bullish momentum. I see the accumulation candles start getting up, meaning that shares are being accumulated. So I could definitely, I have, double confirmation right here, triple confirmation really that I should take a trade. Only thing that would be skew my view right here is maybe the RSI high, but I mean, we're on a 2 minute. It's always high for some reason on a 2 minute or 3 minute or 5 minute. It just seems like that. But only thing I know is the volatility index was low, opening up the market, everything was green. We had strong buying volume at the open on a 3 minute. I could also watch the level 2 and see what kind of bids were coming in. If we had higher bids, then the number of asks, then price is probably going to push up. So these are things just kind of piecing it together. So if I miss this trade right here and we stalled up here, I know that this area, this 290 area, is like a previous area where we formed a sell-off pattern right here with this basing candle followed by an engulfing. So this is like an area I would probably mark and be my new target after we push back down into this area. So we push back down in this 285 area. I know it's acting as support today, but it hasn't proven itself really. It hadn't showed me this acting support, but in my back of my head, that was previous resistance. It should be acting as support. So anytime that we go back down and retest this area and then we start coming back out of this area, I want to look for an opportunity to get an entry. I don't see great volume right here, so I probably would not have played this. But if you were, um, just sitting at the computer and you wanted to play something, this isn't the best example, but you can see right here we have a doji followed by an engulfing. You can kind of get in right here or wait for the retest of this area at 285, or you could just draw a line in the sand and say anything above 285, I'm buying calls. With my stop at like 284.50. If we get below 284.50, then I'm out. So we get back above 285. Let's say we buy calls because we know if the trade doesn't stay above here, then it's not a valid trade. We buy calls, and we didn't have a lot of great volume today, so this really wouldn't be a trade I would want to take. But let's say 290 was our target, and I was willing to hold these since it was Monday, and my contract expired on Friday. We finally hit 290 at like the end of the day, and then we get like a doji followed by an engulfing. But I'm pretty sure we had plenty of them back here. We start seeing the accumulation distribution lines going up, meaning that they're either selling or buying, and we can see up here that this was the previous resistance area, so they're most likely selling. It also correlates with the TTM squeeze. We start losing upward momentum, so this is something we just wanted to watch. But hopefully this helps you guys. But also I'm going to go and let me X out of this, and I'll show you some candle structures that you may want to look at when we get to these areas. So if you look at so if you're in a demand zone and you're looking to put on a trade, you want to look for candle patterns like this. You want to see a doji with a bullish engulfing. You want to see a morning star. These are just different things you want to look for. Let's look over here. So these are like bullish candle structures that you want to look for in demand zones in order to place trades off. You can place a trade off of this, put your stop loss down here. You can place a trade off of this morning star, put your stop loss below here. These are just different candle structures. So once you kind of get these in your head, you can start looking for these, because they're going to show up, and these are the ways you can take trades off of in these demand zones, and vice versa. Go look up bearish candlesticks, and these are ways you can take trades on the opposite side. Hangman, shooting star, gravestone, bear spinning top. These are candles when price moves in supply zone that you could take trades off of. These are what you're looking for to form in supply zones. And you just have to respect your stop loss. And you want to see these. You want to see volume come in and price can no longer push higher. In demand zones, you want to see volume come in and see the opposite of these. These turn upside down, and you want to see volume can no longer push lower. Volume spiking and price can no longer push lower. You want to see stuff like that. And then only play key supply and demand zones, areas where it has already tested and you see there's strong buyers, or areas where a trend started, or areas where a trend stopped. You want to play those zones. I hope this is helpful. So 3 things we learned. Learn these candle structures, the bearish ones and the bullish ones. They'll help you get into trades. Bearish will help you in supply zones. Bullish will help you in demand zones. 2, pay attention to where the volatility index is. If the volatility index is low, then most likely the market's going to be moving up. If the volatility index has spiked, then most likely the market's going to be moving down. If it spiked and it can't sustain the number it spiked to, then it may be a good opportunity to buy the dip. So learn the bearish patterns, learn the bullish patterns. Also, with supply and demand zones, you only will play key zones where prices are already retested and you see there's strong buyers. Or just one thing I had to learn when I learned supply and demand is you don't have to play every zone. If you look at a 4-hour time frame, price may be bouncing between 2 spots. Play those 2 spots that it's bouncing between. Don't play every zone in between, or also notice, like, if the VIX, if the volatility index is low, then you probably just need to be playing demand zones and taking profit at supply, not trying to play supply zones, because they may get broken through. Also, if The volatility index is spiking. You may not want to play demand zones. You may want to play supply zones, play puts down to demand, and take profits at demand. Just, you have to think through these things. And, this is just from experience and from being in the market and having these plays. You learn these things and you start thinking more and trading less and have your trade planned out. Your whole trade should be planned out before you get in the trade, because when you get in the trade, you don't get any smarter. So just understand that your whole trade should be planned out before you get in the trade. You should know where your stop is. And sometimes we rush and we see stuff formed and we get in a trade, and then it's like, dang, I really got a bad entry. Where should my stop loss be? Dang, my stop loss should be way down there. That's where the trade is invalid. And then you end up suffering a lot before the trade goes in your favor. But if you just take some time and actually plan the trade out, you'll know where you want to get your entry in. And then these things will pop up and you'll see, hey, let me put my entry here. This is a good point to get in. And then once you get in trades, you need to learn what they call continuation candlesticks. These will help you stay in trades. And the main ones that you'll see is, you'll see things like this. Like, it'll be a bullish candle, moving up, and then you'll see 3 choppy candles moving back down. You're like, oh my God, like it's gonna hit my stop loss. No, let me just go ahead and exit out for some profit. And then boom, it moves up again. And if you see this, you can kind of see right here, it's doing that and it keeps moving up. But to people who haven't planned out a trade and don't really understand it, hey, most likely the most sellers are going to be up here at the supply zone. If I just hold, my trade is still valid as long as it's over this demand zone, if I get a proper entry. Same thing at supply. Like, it'll come down and you'll start seeing this and it'll start moving back up and then it'll just drop again. That's really institutional orders getting filled. So, and it'll be the reverse of this all the way down. But these are ways you can stay in trades longer. Learn continuation patterns, learn bullish and bearish patterns, and then just think through the trade. Like, think about it before you take the trade. You don't have to be trading and hunting for something every day. Plan these trades out and then execute when they come into the areas to execute. When they come into the demand zones, watch it and see if you can execute a trade. When it comes in supply zone, watch it and see if you can execute a supply trade. And most of the times, it may be some tricks played in those zones, but if you get good entries based off of the candlestick patterns that you should enter off of, instead of just saying, oh, price moved up, let me, like right here, we come down and then price starts moving up, but you don't really have a bullish candlestick pattern right here to take a trade off of. So let's say price stopped here. Let's put your entry right here. Okay, but let's put a limit order right here in this area. And then what happens? Price pulls back down here and your limit order gets filled. And then it takes off in your favor and you have a great entry. And you have a bullish pattern right here with a doji followed by an engulfing. And that's the things you need to watch for. Hopefully I'll post some more videos to help you guys out. But hopefully this answers your question.